Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and Borsog trading, a market synchronization technique. If you're new, a very warm welcome and welcome back KS family. Let's run the numbers. Bitcoin is currently up 1.96% to 21,505. Ethereum is up 5.13% to 1650. Let's have an in-depth look at the market and see if this current rally can continue. Rule 45, no alt can escape Bitcoin's gravity. Bitcoin is currently trading at 21,538. And we can see that Bitcoin is under multiple levels of resistance. We had a very sharp sell-off and Bitcoin is just seeking to recover. But to recover, it needs to pass through this 22,000 mark and preferably up to the 22,500. Then form a bit of a base to get through this top level of resistance at around 22,961. We've seen buyers step in, but it's still very undecided. As traders and investors, we have to be very careful when price action falls below a support line and a secondary support line. We can be subject to two sell-offs. 4 days ago, we were up at this 23,215 level, and then it basically dropped like a brick to 21,068. And we saw a recovery in price to 2 days ago to 21,623, and yesterday it was 21,194. So we can see that we've actually come up here from 21,194 to the current price 21,554. Each day we write down our Borsog synchronization factor. We figure out, is the market going down? That's a D. Or flat? That's an F. Or up? That's a U, just right here. Is it going against our position? And it really depends where we've bought or sold in terms of against. So against 90%, that's what that A90 means. Nowhere or neutral, 5%. Or for our position, 5%. And synchronization factor is just how synchronized we feel with the current price action at the moment. It's always changing. Because as a community, anytime we place a trade or investment into the market, we first consider what is the probability of this trade or investment going against us, going nowhere, or going for us. The most valuable active learning that you can ever do is to pop this synchronization factor down in the comments each day. And of course, the synchronization factor is all about when you bought. And the concept of Borsog is to do coffee money trades. Start with really small amounts. At the moment, the markets have been so incredibly choppy, and you can learn so much by just looking through the comments in the comments section in each video. We have an incredibly supportive global family, and I'd love to thank every member of our community who reaches out in the comments. It's just awesome. There's so much wisdom shared at so many levels each and every video. From the comments section, if you're new to the community, please reach out and say hi. You'll get a really warm welcome. Because I've been in financial markets for more than 3 decades, there is a very scientific structure that I apply to looking at the crypto market. First of all, we must mark up our charts with the CTKS method. That gets us ready to aim. Next, we need to look beyond the charts of the crypto space. We need to collect probabilities on a global basis, and then we move back inside the crypto market, understanding that opportunities reset daily and seeking to find the market's focus. That's what we do each and every day by going through the heat map as well. Before we actually fire off our particular trade or investment, we have to have positive excellence, because we need to master emotional control. And the last process, not the first, is actually buying and selling. Most people get this completely reversed, and that's why about 90% plus of people lose money. The crypto market is incredibly volatile. We need to collect data first and look beyond the chart that we're actually investigating. You can see in the background, here is the NASDAQ 100. You can see the futures have been coming down. We've got a bit of a diversion at the moment between Bitcoin's price and the NASDAQ 100, but we have to look if this is sustainable or not. Why is that? Because of Rule 225, Bitcoin cannot escape the stock market's gravity. There's basically gloom and doom everywhere you head if you head into the news. Global economy's flash warning sign of sharp slowdown. As crypto technical analysts, we don't chase after news headlines. We seek to look at the data. We dig deep and understand how it all interconnects and intercorrelates. When we look at the probability of a 50 basis point increase, it's actually come up a little bit from yesterday. Yesterday it was 45%. Now it's 49.5%. This will actually throw a bit of a relief into the markets. This is one of these data points that we really need to follow. And if you look at the probability of a 75 basis point increase, it was 55% yesterday. It's gone down to 50.5% today. This is actually really good for the economic system. And we cover this off in the active learning. If you're not sure why, please look through the past several episodes. You'll see a lot of really, really good commentary there. But again, we don't care too much for one specific data point. We need to look at many others. We can see the 5-year and 10-year break-even inflation rates absolutely going for it as the NASDAQ comes down. This would mean that the probability of actually doing a 75 basis point increase or even a 100 basis point increase is well and truly on the table. And the next FOMC meeting is in 28 days. It's good to also remember that a lot of economic data, such as annualized inflation rates and CPIs M1, M2, are very, very lagged. If you're an investor in any specific country outside the US, it's really, really important to understand that around 60% of every dollar that's spent inside stock markets actually goes to the US market. And what this means is basically when the US market sneezes, the world catches a cold. This is something that catches a lot of people new to investing and trading off guard. For example, if the NASDAQ, the S&P, the Dow, the Russell come down, you can pretty much bet that the Japanese market, the Taiwanese market, the Australian market, Germany's market, all the rest will come down as well. You always get some degree of miscorrelation, but that is largely dependent on other factors. As traders and investors, we deal with probabilities, and when you stack the probability, it's a very, very good probability. For example, look back to the C19 crisis. When the US markets came down, there wasn't a market on the planet that escaped, and of course, it pulled Bitcoin down as well. What do we see inside the futures? The NASDAQ 100 has retraced to below a resistance level. It could have been support, but it got broken because the VIX spiked up. What about the S&P 500? It's below a support line. That line is now resistance. What about the Dow Jones? And you got two resistance lines in the S&P 500. The S&P 500 has been the weakest of the four major indices. The Dow is also under resistance, and when you look at the Russell 2000, that's above support. So good on you, Russell. What's causing the instability globally? Well, I believe it's the VIX spiking up. The VIX is the fear gauge of the market, and we can see the VIX absolutely romping away, and these are the VIX futures. And Masterclass students, you'll get this live chart in TM6. When the VIX spikes up like this, it's not a good sign. If you actually go back in history to look at when the VIX spikes up and look what happens to Bitcoin, and of course this happens to the major indices as well. If you're only an investor and trader in the stock market, you must keep your eye on crypto because it throws really, really good signals for the stock market. Sometimes it goes out of phase, but in the main, when you get a spike in the VIX, the markets all come down, and I mean all of them. I mentioned yesterday that in the NASDAQ 100, we've got a very, very key level of support. It's a very strong level at 12,847.50. You can see prices basically come down to that level and touched it and bounced up. We've got another intervening support level there at the moment. And what you will actually find is all the people that have gone short that have sold will now need to buy back because they're getting into support Of course, we would anticipate a bit of a technical bounce, but it may not be much of one, especially if the VIX continues to spike up. This is very, very alarming behavior. We can see bond prices continue to fall, and this is really quite interesting. When we get a risk off in the markets, bond prices are usually the first to rally up and bond yields to fall, but it doesn't always hold, and the bond market has been literally insane for about the past 18 months. And when we look at gold, we're seeing a bit of a technical bounce from this quite strong support line. How well it will do will very much depend on the DXY, the US dollar currency index. I'm going to go into this with a lot more depth in this particular episode because I believe you need to understand how the DXY is coming up to some very, very key technical levels. And when we look at oil, we can see oil is going on a march, but it's going to hit this strong resistance level here at 185 cents. It's currently 145. Just take particular attention to these levels. And when we see junk bonds are indicating there's still risk off in the economic system. That basically means that investors are sitting on the sidelines. We need to know all of this to actually trade our beloved alts, because the alts are influenced by Bitcoin, and Bitcoin is influenced by everything we're looking at right here. There are some very key levels on the DXY. What you can actually notice is the DXY is currently trading at 108,511. It's just above a key support line of 108,448. Now, what will happen here, because we've just rampaged through and up so strongly, there's going to be a lot of sellers selling around this particular level to try and squash the DXY down. Of course, we also have some potential profit-taking action and also some potential bounce action in the major indices, for example, the NASDAQ 100. If the DXY does in fact come down, the next support level will be 106,052 and a very, very strong one at 101,569. And you can see there's a variety of very strong ones between 98 and 93. Let's go the other way. What are the headwinds? For example, if we just continue up with the DXY, we've got a very strong resistance level at 110,689. And then when you look higher, there's an absolute barrage of resistance levels. The DXY is going to have a lot of trouble going from 114 into 120. Just keep this in mind. Let me know in the comments, what do you think the DXY will do? Where do you think it will head to? And you can see Bitcoin's price action in this blue line. We always compare everything to Bitcoin because we're a crypto-centric channel, but we look at everything. It's also really good to keep your eyes on the metals. When we look at the inverted DXY, it generally throws a very good signal. That's this green line here on what the metals will do. It's not a perfect signal, but it's a really good signal. Also, the inverse of the DXY is accompanied by the inverse of the VIX. The inverse of the VIX will help to understand what metals could be doing. And we can see something really interesting. Copper is actually picking up steam here. I'll just make it a little bit more easier for you to see. You can see copper is coming up now. The inverted DXY, that's coming down, which means the dollar is currently rallying. What every professional trader and investor seeks to do is to be on the right side of the percentage. That's rule 359. One way we can do this is to understand sentiment. And when we look at sentiment, it's basically been coming down for a while. Sentiment will pretty much equally match price. When seeking to determine where prices could go, looking at the longs and the shorts is a really good thing to do. And when we look at the shorts, this red line, we can see the shorts have been coming up. They're losing a bit of steam and losing a little bit of confidence at the moment. We can see the longs were coming out of the market since the 9th of August. And that's quite a long time, about 10 days they were exiting the market. Now the longs believe that they are buying the dip, so they're coming back in. When we look at liquidations across the past 24 hours, we can see 142.27 million in liquidations across 46,587 positions. When we look at total liquidations across the past 24 hours, 69% were short. What about the past 12 hours? It increased 80% short. What about the past 4 hours? It decreased about 61% short. And what about the past hour? It's gone short again, 92% short. The shorts are getting whacked about by the longs. But we can see it's relatively low volume. It's not a lot of volume, which means it's not a lot of commitment. One thing that could be really useful, we've seen a lot of high liquidations here, and what happened after that? The price, of course, came down, but then has managed to come up a little bit. What about this one? High liquidations here. What did the price do? It came down a lot, a little bit of a dog leg up, and what happened then? It came down because there was a lot of positive momentum, and we can see much higher volumes here and here. So it's a little bit different from the current scenario where we find ourselves. So just keep your eye on what happened in the past. It can be a very, very useful thing to do. This is all part of your active learning. For many years, I lectured first and second year statistics, and I found that when I gave my students active learning to actually go home and think about things, they embrace statistics with an absolute passion. And of course, I made it as simple as I possibly could. I actually taught first and second year statistics from the numbers 1, 2, 3, 4, 5. The key is always understanding. And if we look across the past 24 hours, we can see global crypto market cap increased by 1.95% to 1.03 trillion. The greatest gainers in the past 24 hours, Chile's up 16%, XTC 15.4% up, Atom nearly 12% up, Curve, CRV, just a little over 10% up, CVX about 10% up, and Bitcoin Cash a little over 9% up. When we look to the other side, the greatest losers in the past 24 hours, Celsius down 2.6%, EOS down 2.2%, PancakeSwap 0.6% down, BNB 0.5% down, and TWT 0.38% down. It's always important to know that all investors become traders anytime they buy or sell. Investors and traders are just the same basic people. They're just holding for different periods. For example, a lot of hodlers will hodl no matter what, and that can be a decent strategy. But what investors do that traders don't do, traders seek to get into synchronization with the market and keep on turning over small percentages as they go. And why would they do this? Because it pays. It really, really does pay. You can make far more as a trader than you will ever make as an investor. For example, if you just could turn 2% per day, and this is not a stressful thing, it doesn't mean you need to turn 2% per day. Some days you'll sit outside the market, and that's perfectly valid. Other days you'll make 5% per day. But if you could just make 2% on average, you would grow $100 into $138,424. The concept here, when you're investing, you ride the waves up and down. You buy in at one position and you sell at another position. When you're trading, you profit from the waves. Also, investors and traders have different mindsets. For example, when price comes up, traders get anxious when the main street gets very, very over-optimistic because we know that a correction will come. Price is always moving in a wave. When retail runs for the hills, smart money, we step in and we're bidding the price up. It's a very, very powerful way of understanding the price is always just moving in waves. There's no reason to leave the dance floor. I call this the dance floor, when the best music is playing, but of course no one's there because it becomes really, really red. Let's look at the top 8 cryptos, and we can see Ethereum following Bitcoin's gravitational pull. What about Binance Coin? We can see Binance Coin acting with more strength, getting to a resistance level. It's making a key play now. It wants to break this level and go up to around 314. 260. So, or it could break down and come back to about 283.80. And when we look at ADA's had a very sharp sell-off. Now, if the markets can convince the VIX not to spike anymore, bad VIX, stop doing that. If that's the case, and the Fed won't raise interest rates by 75 or even 100 basis points, we could get a rally up. We really have to keep our eye on the statistics each and every day. What typically occurs in crypto, and indeed the stock market, is people will get a beloved crypto, a beloved alt, or a beloved stock, and they'll just look at that. They'll ignore the main market, they'll ignore macroeconomics, they'll ignore just about everything and say, why did it go down? Why did it go up? What's this thing doing? I just don't understand it. When you have a look at the market from a holistic perspective, a statistically based perspective, and that doesn't mean that you have to crunch numbers. We'll run the numbers for you. But the concept is you must be aware of what is driving everything. What is driving XRP? Bitcoin is. If Bitcoin comes down, why would it come down? Because of the macro. So everything is interrelated. That's why we did a bit of a deep dive on the dollar as well, because it all counts. And what we can see is Bitcoin's gravity is playing out on all of these alts, and it does so all of the time. Let's have a look at Solana. Solana is showing a bit of weakness now. Bitcoin relatively is showing a degree of strength, but it all follows Bitcoin's gravitational bias. If we have a large sell-off, you'll see that the alts all actually synchronize in. This is why we have that Borsog factor, that synchronization factor. And it's really important to put how you feel, the percentage synchronization factor you feel that you are with the market. It's completely personal. And have a look at Doge. Doge spiked recently just before the sell-off, and it's come back into synchronization with Bitcoin. Looking at Polkadot, we can see Polkadot showing a little bit of strength. Dot was really, really weak several weeks ago, and we've seen ADA be weak several weeks ago as well. We may have a changing of the guard. Maybe ADA becomes stronger and DOT becomes stronger. Now, the reason that I put on this particular, I'll show you how to do it, this crosshair, is because I want to compare. You just follow my mouse here. This was Doge. Doge spiked. Now notice if you go across to SHIB, where is that spike? It's right there. SHIB spiked first and then Doge followed. So what we actually saw was the meme coin spiking just before the sell-off. A lot of people don't realize exactly how important Rule 774 is. Master yourself to master the market. Typically, retail investors and traders. And what is the definition of retail? It's anybody inside Zone 1 and Zone 2. What's the definition of smart money? Anybody inside Zone 3 or Zone 4. Zone 1 and Zone 2 are the lose money rules, and there's a lot of panic and a lot of blame inside those rules. And Zone 3 and Zone 4 are where people make money and keep money because they have a different mindset. What is the Zone 3 and Zone 4 mindset? It's one of positive excellence, which is all about sustainable fulfillment, meaning, happiness, and success. But it's also incredibly important to have inner and outer peace before you can trade effectively. If you're pushed around by your emotions, if your emotions bully you, into optimism and thrill and euphoria, anxiety, denial, panic and anger and hope and optimism, it's a crazy, insane thing. Smart money doesn't do that. It's unemotional. It has the knowledge. The smart money always does the hard work. They have dedication and patience. They understand the science. They run the numbers. Positive excellence is not just a way to have a very meaningful and happy, successful life and fulfilling life. It's a way to absolutely make profit from whatever market you're investing or trading in. I asked yesterday, what's your favorite box on that particular framework? And John said, inner and outer peace. And why? Because he said, it gives me pause to think and act according to and practice those other elements in the positive excellence framework. And Jade said, gratitude and happiness is great, but I also like persistence and commitment. And Shane said, inner peace and outer peace. Well done, everyone. A terrific active learning question for today's video. Why is the retail roller coaster mindset of emotions problematic? Please let me know what you think. Your answers will help a lot of people. Before you get into your trading and investing, it's really important to prime your mind for profitability in the crypto market with positive affirmations. This is what the CTKS Creed is all about. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with Borsog. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. If you would like to learn how to Borsog or to be a crypto technical analyst, you'll find the links in the description of the video to the CTKS Masterclass. Within the next 2 weeks, I'll be actually reading out and have selected the scholarship winners. So if you've not done the application for the CryptoTradingKS Masterclass scholarship, which is a partial scholarship, please do so. And you can also find the tax software I use, and you can always directly message me on Twitter at any time. And there's a number of very, very good spot exchanges and other useful data sources in that description. We'll have a quick look through the crypto market for Borsog opportunities. Please consider sharing and liking this video and subscribing to the channel. We would love to have you as a part of our globally extended KS family. If you have friends or family who could benefit from positive excellence and what we do, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Thank you very much to our moderators for keeping our community safe from scammers. And please note, I don't have WhatsApp or Telegram. If anybody wants you to go off YouTube or Twitter or anywhere else to WhatsApp or Telegram or any other social site, just don't do it. You've got to be really careful these days. That's exactly why I put links in the description of this video. The links are trusted, but links in comments, not so much. And thank you very much to the CTKS ambassadors for assisting Masterclass students. And of course, a very big thank you to you for watching and for being part of our global family. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.